Hello, everyone, and welcome to this Africa Talk event hosted by the Lusigi Institute for Africa here at the LSE, and a particular warm welcome to those who are joining us online, and an even warmer welcome to those who have joined us in person, especially since we have a transport strike here in London today. My name is David Luke. I'm a professor in practice here at the Lusigi Institute for Africa here at LSE. And it's my honor and privilege to chair this session of the Africa Talk today, which is on 65 years of central banking in Ghana. And we have a distinguished panel. On my right is Dr. Ernest Addison, the governor of the Central Bank of Ghana. Welcome, Dr. Addison, and we look forward to hearing from you. And on my left is Dr. Angela Lusigi, who is the UNDP resident representative in Ghana. And as I was just teasing her, she has a ringside seat on what is going on in Ghana, and especially well-placed, aside from being an economist in her own right, well-placed to give us a commentary on the subject of the talk today. We also have joining us from New York, my colleague, Professor Piroska Nagy Mohácsi, who is a visiting professor here at the Lusigi Institute for Africa. And glad to see you, Piroska. Piroska is, I'm sure you've seen all the bios. I'm not going to get into the bios, but Piroska has served for many years at the IMF and also at the European Bank for Reconstruction and Development, and has also been a former IMF mission chief for Ghana. So Piroska, I think you know the history. You know the where, as you sometimes will say, where the bodies are buried, and you know, certainly we're going to try to unearth them here this evening. Well, without further ado, I'd like to call on Dr. Addison to make his presentation, after which our two other panelists, Dr. Lusigi and Professor Nagy Mohácsi, would respond to your presentation. So, Dr. Addison, you have the floor, and you can, yes, you can move to down there. Thank you.
Well, thank you very much for that introduction. Let me first thank the London School of Economics for agreeing to host this lecture to mark the 65th anniversary of the Bank of Ghana and central banking in West Africa. Also to thank Ivor Ajimandria, who promoted this lecture as part of his book project on the central bank and the governance that shaped it. The LSE Alumni Society in Ghana, I understand, very keenly interested in this lecture. And then also to thank you, Professor David Luke, for agreeing to chair this evening's lecture. Last but not the least, to thank Professor Tim Allen, who's the director of the Lusigi Institute, and then my fellow panelists, Angela Lusigi with the UNDP in Accra. And then Nagy Piroska, who used to be mission chief to Ghana when I was director of research. So we worked very closely on the Ghana program in 2007. Mr. Chairman, central banks in sub-Saharan Africa have faced myriad challenges over the last 50 years, and Bank of Ghana is no exception. We think that as we celebrate 65th anniversary. Before I do that, I should also mention that I have three of my board members present here, Mr. Andrew Boydo, Dr. Nyantichi, and Mr. Buckner, who are in London to support this event, as well as other business of the bank. thank you very much for the support, as well as some of the colleagues from the Bank of Ghana who are in town. So thank you all very much for the support. So 65 years of central banking in Bank of Ghana also, in a sense, marks 65 years of central banking in West Africa, because that was the first country in West Africa that had a central bank. You would recollect that in those days, Gold Coast, Nigeria, Sierra Leone, and the Gambia were members of the West African Currency Board, which was established in 1912, with its headquarters in London to oversee monetary activities in the territories and the colonies. As the countries moved towards political independence, Ghana realized that political independence without economic independence was not very meaningful. So along that thought, the Bank of Ghana Ordinance was passed into law on the 4th of March, 1957, 2 days before independence. And the bank commenced business in August 1957. Now, the immediate post-independence period was clouded by decisions on what the central bank was supposed to do, what was the mandate of a newly established central bank, what should be its governing structure, and the issues of independence of the central bank. So you notice that in that 1957 ordinance, this was more or less restricted to just issuing and resuming banknotes and coins and trying as much as possible to maintain monetary stability and the external value of the currency at that time. However, this rule-based approach to monetary policy making was not consistent with the national policy and objectives at that time. So it was not surprising that the 1957 ordinance was replaced with the Bank of Ghana Act 1963, which is Act 182. Now that Act 182 refocused the mandate of the bank towards a more development-oriented framework. Consequently, the bank, among the policies that were implemented, included imposing interest rate ceilings, foreign exchange regulations and allocation, as well as directed credit to different sectors of the economy. It went as far as establishing a department for development financing. By 1963, the Act was also re-amended again in 1965. This is the Bank of Ghana Amendment Act of 1965, where the then government took stronger interest in the management of the bank, and the directorships at that time were made by the Minister of Finance. You would see that the Bank of Ghana Amendment Act at the time reflected the difficulties that the Ghanaian economy had started experiencing in 1965 with sharply declining foreign exchange reserves. And this is really the motivation for why the government took more interest in the appointments to the board of the bank. Now, between 1970 and 2002, the country was governed by a series of military governments, and the Central Bank Act was kept intact till 2012, when the new Bank of Ghana Act was promulgated. This 2012 Act was also amended in 2016. I'll come back to the latest act and what that act tries to do. But like all central banks in developing countries, some of the technical difficulties that the bank had to deal with had to do with the fact that financial markets tend to be shallow, and therefore conducting monetary policy through secondary markets was difficult to do. There were issues about monetary policy transmission processes in shallow financial markets. There was the difficulty of having an effective monetary policy when you have fiscal dominance, because the impact of the fiscal on aggregate demand tends to be much stronger. There were issues about the exchange rate channel, which were also not allowed to function appropriately because of concerns about the impact of the exchange rate in the economy. The wealth channel was no better because of the lack of markets in bonds and real estate and stocks. Perhaps the more important channel was the bank lending channel. And yet even here, the transmission of policy rate decisions through banking lending rates tend to be incomplete. We didn't see the full pass-through going from our policy rates to the lending rates of the banks. And these were typically challenges that central banks in developing countries face, and Ghana was not different. In addition to that was the volatility of fiscal policy in developing countries like ours, where you tend to see a lot of pro-cyclical fiscal policy, as the taxation from the commodity sectors tends to influence the level of government spending, and there is very little intertemporal smoothing of government spending. As I said, the more recent act for the Bank of Ghana was the Act 612, which marked a turning point and refocused the bank on the issue of price stability as the most important primary objective of the bank, and then also bringing in the issue of economic growth, banking systems as secondary objectives, secondary to the objective of price stability. In addition to that, the Act established the Monetary Policy Committee, which takes the decisions on the policy rate. And the committee itself is made up of 7 members with technical knowledge on the subject of monetary policy formulation. 2 of these members of the committee are external members and are not appointed by the government. And this is unique to the Bank of Ghana. There are not many central banks in our sub-region that have monetary policy committees that are this strong. Secondly, that act also provided for the operational independence of the central bank, even though the government and the bank jointly set the target for inflation. The bank has the responsibility of initiating proposals for the formulation of its policies, as well as providing the statistical data and advice needed for that. It's been said that an independence of a central bank does not mean that the central bank does not interact with the government. Indeed, our former president at the inauguration of the Monetary Policy Committee recognized the importance of well-specified mechanisms for cooperation between the bank and the government, and saying that such interaction need not compromise the bank's ability to carry out its mandate. Later on, we will discuss how this one such mechanism, the Memorandum of Understanding, allowed us to keep central bank financing out of the picture for a number of years. Now, another important factor for the Monetary Policy Committee is the challenge of communicating the central bank's decisions to investors. So we have spent quite some time to build the capacity of our staff, work with the Bank of England to effectively communicate monetary policy decisions, and then also to come up with bi-monthly press releases and press conferences, as well as publishing the data packs that summarizes key variables that forms the basis of the Monetary Policy Committee's decisions. All of these reports are published regularly after every Monetary Policy Committee meeting. The Act tackled the issue of monetary financing, as I had said earlier on, prohibiting the financing of government spending permanently. Indeed, the Act provided for just the 10% of the previous year's total revenue for financing. The amendment in 2016 sought to eliminate the central bank financing of government completely. Unfortunately, that was not very popular with the legislators in Parliament, and they refused to do that. And however, they reduced the ceiling to central bank lending to just 5% of the previous year's tax revenue. I must say that this issue of fiscal dominance has been a major factor playing out in the inflation experience of Ghana. So under the most recent ECF engagement, with the IMF. There is this conditionality on zero central bank financing. And the central bank and the Ministry of Finance signed a memorandum of understanding to stick to this zero financing. And I believe that if you look at the inflation experience over the last 3 years, between that time, 2017 up to 2019, one could see that it has been effective in keeping prices relatively low. So what are the current challenges facing the central bank? I had mentioned the issue of fiscal dominance. I don't want to go through the details of that. The issue that concern us currently, the issue of the high debt vulnerabilities and how that, in a sense, affects the behavior of governments to be able to keep within the expenditure targets. And this debt situation has been compounded since the COVID-19 pandemic hit. As you're aware, the COVID-19 pandemic came in 2020, at which time we had seen a very significant improvement in our economic performance. The growth rates were relatively high, at almost 7%. Inflation had come down. I was telling the chairman, David Luke, and the team there about the improvements that we had seen in our financial system with the increased capital buffers. Now, the COVID-19 pandemic brought up the issue of the governments and the government's role in managing the crisis. And this had to be done through fiscal interventions, which in a sense protected a lot of the lives and livelihoods. And earlier discussion, I think Angela was talking about how those measures were very effective in preventing a recession in Ghana. And Ghana was one of the few countries that did not experience a recession in 2020. So we saw our fiscal expenditures grow significantly at that time through the accommodative conditions that were created to stabilize the economy. Since then, we have had fairly difficult times trying to access financing, for the fiscal side of our economy. And that creates difficulties in terms of the sustainability of the stance. And this is really one of the issues on the broader view of what fiscal dominance is, that you could have soft fiscal dominance where you have central banks trying to maintain accommodative financial conditions to contain domestic borrowing costs. This is one of the types of fiscal dominance that you can see. And at a time that you're experiencing rising inflation, how do you manage to contain domestic borrowing costs? And also because this domestic borrowing cost eventually feeds into the issue of debt sustainability. In a situation where economic growth is weak, supportive fiscal policy can also be constrained by high public debt. And then the central bank has to play a more proactive role to support the economy through sometimes lending to private sector or troubled state institutions. What is clear from the existing literature is that the incidence of central bank lending to governments in sub-Saharan Africa has been higher than elsewhere, amounting to about 2% of GDP on average, compared to 0.5% in other jurisdictions. However, we have witnessed a breakaway from the zero lending to government as a result of the COVID-19 crisis. Some central banks have had to lend to governments as financing gaps widened and constrained fiscal policy implementation among revenue shortfalls due to the slowdown in economic activity. An indirect form, which has also complicated the conduct of monetary policy. This is the high financing gaps and the dependence on external financing to close such high financing gaps. And this, in a sense, forces central banks to undertake monetary policy to ensure the external financing premium remains to keep domestic assets attractive to non-resident investors. So this also becomes a source of constraint. In the ECA program, the ceiling that was given to the government was actually a ceiling on gross financing from the central bank. And this really was not in line with the zero financing in the ECF. And as I had said earlier on, our legislature did not really agree to that particular level of financing. But we signed a memorandum of understanding with the government to ensure that the financing levels were low. Let me move on to the more recent developments, in particular what we have seen since the beginning of this year, where we have seen the external shocks that have come through to almost all emerging and market and developing economies. As countries in the sub-region became increasingly integrated into the global trade and financial networks. The uncertainty surrounding the timing of monetary policy in the advanced countries has also increased the volatility of capital flows to emerging markets and developing economies, as well as the African frontier economies, some of which has led to sudden reversals of capital flows, leading to very large and disorderly depreciation in the exchange rates, with adverse implications for both inflation and financial stability. There have been other exogenous shocks, as you're aware. The oil price shock, the pandemic, have also brought significant challenges to monetary policy implications. We were again discussing this issue of the supply side shocks that we have seen coming in, and I had to make the point that monetary policy does not really focus on the supply side shocks, but we are looking at the second round effects of these supply side shocks and how they affect the anchoring of long-term inflation expectations and the behavior of wage agitation. So really, this is the only reason why central banks reacted to the recent inflation spiral that we have seen. As I said, in Ghana, we saw inflation jump literally from 7% a year ago to nearly 28%, 27.4% to be specific, at the latest reading. We had anticipated in 2021 that we would need to tighten policy. So the Monetary Policy Committee raised the policy rate by 100 basis points in November 2021, only for us to see inflation go further up in January. And then in January, we had the Ghanaian economy being downgraded, which immediately sent our currency into a spiral, because it was very clear that for a country that has been borrowing nearly 2 billion to 3 billion every year on the capital markets, if we are not able to go to the capital market to borrow, then the outlook for the currency was not that strong. We saw a very sharp depreciation in the currency. We therefore had to again raise our policy rate by 250 basis points in the March meeting. And then still we saw inflation still going up. We had to raise it again by 200 basis points, accumulating 450 basis points over the last few months. So really, this is the challenge that we are seeing in a small open economy such as ours, which is subject to all these global shocks, and the central bank's role in trying to mitigate the impact of these shocks. And I think that this is a challenge that most sub-Saharan African central banks are currently grappling with. Some of the measures that we at the central bank level had to take included, some of the financial stability measures to keep our banking sector stable. Let me move on to a more interesting subject, which Angela was talking about, Mr. Chairman, the issue of digitization and the Bank of Ghana. Given that everything is being digitized, the central bank also has tried to face the challenge of that financial landscape. The future of money, as we have heard, probably is in digitization. So currently, Ghana is piloting a central bank digital currency, even though Nigeria has already introduced one. There are other countries in our sub-region that are also seriously considering the CBDC. I had said that the idea of a digital currency for Ghana was quite straightforward because of the experience we had had with mobile money. And a lot of the populace were very comfortable transferring value using mobile phones. And therefore, creating a token of the domestic currency and using the same sort of technology to move that token around, becomes a very easy, logical step to make progress. And we have this pilot scheme, which has just about ended in one of the rural towns in Ghana. And the initial tokens, for those that were participating in the survey, the initial tokens were bought for them so that they could try the ECD and give feedback to the surveyors. The feedback that we got was that those who ran out of tokens actually used their own resources to buy more tokens. So for us, that was very good feedback on how the future for a digital or an ECD will be in Ghana. So I know I have just 20 minutes. Unfortunately, I have to rush through what I'm trying to say. But to conclude, I think that the central bank has come a long way, 65 years, trying to model through what its mandate should be. Should it be concerned more about development, or should it just focus on the currency board type of stability? And this was a debate that they had right from the beginning in 1957. And the ordinance opted for a stability-oriented, central bank. Barely 5 years into that, they were not happy with that stability, and they wanted to see more development-oriented activities by the central bank. So you saw that the act again was revised. And then as the economic conditions deteriorated, we saw further amendments to the act until everything got out of hands and the military took over. And then we see that when the democracy was restored, the issue of the role of the central bank came up again. And then we have a new act which really focuses the central bank on price stability, which we have been operating since 2016. Now that act also gave powers to the central bank to do the cleaning up of the financial sector. So we had an act that gave the central bank powers of resolution, so that if there were financial institutions that were failing, we had the power to take them out. So that act in 2016 has sort of strengthened the hand of the central bank. It's made it more independent in dealing with the issue of central bank financing of government. It's made it stronger to deal with the issue of weak financial institutions that are not being respecting prudential regulations. And we saw the benefits of that through the improvements in the broader economy over the 3 years or so that we were in office between 2017 and 2019. At that time, the central bank had a memorandum of understanding for zero financing of the budget. The government itself had committed itself to a ceiling of 5% deficit. And then COVID-19 broke. So what does the ceiling of 5% fiscal deficit mean? What does an MOU mean when human lives are involved? So we had to more or less jettison all these nice rule-based approaches to managing the economy, and then be a little bit more practical in trying to deal with the issues of the day. And obviously, moving away from these strict limits obviously also leads to the instability that we are seeing. A lot of it is global. It's coming from, shocks from the Fed, shocks from Russia and Ukraine, but then we also have our own underlying fiscal issues, which probably has made our situation a little bit more difficult than in other circumstances. Thank you very much, David.
Thank you very much, Dr. Addison. I think you've given us a fascinating account of the evolution of central banking in Ghana, but I think in parallel, you drew the parallels to a similar evolution in other emerging economies, other developing economies. And with a few important milestones, I think you referred to the 2016 reform of the Central Bank of Ghana Act that made the central bank, as you say, operationally independent, but still, of course, part of the economic and financial policy making framework of the country, with an independent and innovative way of constituting the monetary policy committee. I think that has to be said. And then I think you also able to explain to us how the twin shocks of the COVID-19 pandemic hit the Ghanaian economy, as well as, of course, now this year, the shock from the Russia-Ukraine war. It did occur to me that if you were giving this speech in 2019, it would have been a very different speech, because you ended with this note of crisis. In dealing with the fallout, as you rightly point out, the secondary effect of the supply side shock, but also high inflation now that you have to deal with, whilst at the same time trying to ensure that the economy continues to grow, so to square that circle. And then, of course, the problem with the rating, the country's rating, which has fallen as a result. So I think you've given us great insights into these issues, and as I've said, it would have been a much more celebratory atmosphere we would have had if this speech was given in 2019 rather than now in 2022. But you ended with a very important point, which I think we should all take good note of, and that is despite this current crisis, the continuing efforts to innovate, to deepen the financial system using new digital tools. And I think that's a very important thing, because what it means is that you're making the financial system open to everybody, and that is what we want to see. So thank you very much. I think so very strong insights here. We're going to come back to interrogate many of these issues. The question of fiscal dominance, I think is inevitable in a developing country context when you're also firefighting and so on, but I'm sure that others will have some insights. And also the international context. I would argue that the international system has not responded as effectively and efficiently as it could have to developing countries in these crises, but we could come back to this. So it's now my honor to turn to a good former colleague, UNDP colleague, Dr. Angela Lusigi, to give her comments to Dr. Addison's speech. So Angela, you have the floor.
Thank you very much, Professor, and congratulations, Dr. Addison, for such illuminating remarks that really walk us through what has been going on with the central bank and the changing role. So my comments are really going to be around what you started, the discussion you talked about, new roles, new expectations, and new partnerships, very much arguing for that development-oriented framework for the central bank, and a more proactive role. And I will end with looking at some of the levers that could be considered for some of this. For some of you who may not be familiar with the United Nations Development Programme, we're the development arm of the UN system, and we provide integrated development solutions that are anchored on country priorities, very much looking at three drivers. How can we have greener and fairer structural transformation? How can we have inclusion to make sure no one is left behind in growth? And also, how do we build resilience to shocks? Because much of the progress and much of the discussion we're talking about now is about the shocks from COVID and other shocks that are happening. So that very much is at the forefront of our agenda. So in speaking about the emerging role for the central bank, and this is a case study of Ghana, but could probably be applied to a lot of other countries in Africa, I'd like to fix our attention on the COVID crisis and some of the things that happened in Ghana that are very instrumental to the recovery. And if you look at the COVID crisis, it had three clear dimensions. There was a health effects, there was social economic effects, and also the long-term effects. And then also beyond COVID, we've just talked about, you know, the unfolding climate, environmental, fuel, energy, and food crisis. It just seems that there are shocks all the time. So we really, even as we're looking at COVID as an example, we can really extrapolate that to handling some of the other shocks. So what happened with COVID and health effects? We lost lives. And that was significant. And it also revealed a gap in the functioning health systems, the inclusion, and the fact that we needed to transform. And in the case of Ghana, there was a lot of investment in using data, in using digital to be able to ensure the continuity of health services, and also empowering local actors. And the future is really looking at how we can have more locally manufactured vaccines and equipment. And I'm talking about this because all this needs money, all this needs investment. So that's also is one of the challenges as we're looking at the recovery. We very much have to look at where is the investment going to come from and how can we sustain it. And then let's look at the socioeconomic effects from COVID-19. We lost jobs. We did a survey of businesses that were impacted by COVID-19. Many businesses closed and it took almost 9 months for them to reopen. The issues around food insecurity, disrupted social services, education in particular. And what it revealed was that there is an important role for social protection and social services. And what the government provided at that time was relief, including cash transfers. The governor already talked about support to businesses. I know even water and electricity utilities were paid for a while. So again, you begin to see what envelope was required to cover what we are looking at now as a recovery. And no sooner had we started to recover than new threats showed up. So again, you see a very active role in providing that protection, but also building the recovery going forward. And what about the longer term effects? Well, the governor talked about falling revenues and commodity price fluctuations. So just at the time when you needed more financing, what was coming in was reducing, and that led to the shrinking fiscal space and also rising debt. So these are some of the roots of what we're now seeing and responding to. He also talked about macroeconomic instability and the discussion around inflation, currency fluctuation. And I think something that was very important that you raised was the fact that these were considered cyclical in the past, but now they're actually longer term trending issues. So the instruments that we are looking at to deal with issues around inflation and currencies are actually global problems that are now internalizing. And now we need to look at more long-term instruments and partnerships to be able to deal with this. Another long-term effect was around reversals in global trade. Just at the time when we were trying to stabilize and get access to all sorts of things, including vaccines and PPE, there are more barriers to trade that are rolling around the corner. And this brings me to the point about what do I see and what do I propose as some of the new roles, building on what you had already presented. Of course, the robust macroeconomic and regulatory framework is very, very much required. But again, advocating for a balance with a development-oriented framework, how can we have more multilateral collaboration and regional collaboration in order to be able to deliver the needed fiscal space to respond and sustain the kind of responses that we need? Looking beyond COVID, with the shrinking fiscal space, are we able to keep having that kind of support going forward without really looking at this issue of multilateral collaboration? And this brings me to the point about we really need to look at beyond maintaining macroeconomic stability to actively enhancing growth and rebuilding investor confidence, because I think this is really an important springboard for being able to deal with new actors who might not have adequate space now. And finally, it all comes down to how do we foster a regional response to development risks? You spoke about other central banks in the region. As we face ongoing crisis with food insecurity, climate change, conflict and violent extremism in the Western Central Africa region, I think very much having that regional lens is important going forward. So finally, just to highlight a few of the things that I think came out very clearly as part of the recovery as something that the central bank should continue, is the issue around digitalization. You mentioned the very important role of financial inclusion, and I like the example that you gave about digital currencies, because if you're thinking about SMEs recovering, then you'd really need to see how we can modernize service delivery and using digitalization, for instance, build on the fact that we now have digital financial identities to be able to create sort of credit scores or something that's beyond having assets in hand, so that we can actually meaningfully start seeing the liquidity flowing to the real economy. And that brings me to the second D, which is developing local economies. We found around COVID-19 that for the recovery to happen, it had to be spread out. I like the idea of working in Seshivia, So, and some of the other local economies to try and see how we can pool investment to be able to finance the recovery there. Diversification. I'm an agricultural economist by training, so I can't end without talking about the importance of agricultural productivity, inclusive and green structural transformation. And I see the work that needs to be done across borders is very important, unlocking the power of trade. And here the work that the central bank is doing on the cross-border payment platforms is very important for trade, investment, and regional integration. And then finally, you talked about development financing, including improving public financial management, increasing domestic resource mobilization, but also the issues around stopping illicit financial flows and capital flight. Really to strengthen the economy's capability to generate internal resources is very important. And I think all these, the digitalization, developing local economies, diversification and development financing could go a long way in expanding the fiscal space that we need to power the strategic investments so that we can catalyze growth, we can deliver services, and we can protect people and build economic resilience. So with those few words, I'll hand over back to you, Professor. Thank you.
Good. Thank you so very much, Angela. Yes, indeed. Well-deserved round of applause. No, thank you so very much. I think you've done two things. One is, to unpack this question of fiscal governance. And I think you've actually put a human face on the issues, especially around COVID, the measures that the central government needed to take to ensure a level of social protection and so on. And then I think, Governor, she has given you a number of insights into how you can dig yourself out of the hole that you, if I could put it that way, that you're currently in. And I think here, certainly I think these points that you've raised around the questions and measures to ensure that there's fiscal space, not to forget the development dimension, not to forget growth, the role that trade can play here. Of course, as part of development, also the question of diversification, and then of course taking into account that we live in a world in which we need to pay a lot of attention to the sustainable impact of all of the above, so to say. So you brought this question of green structural transformation very much into the picture. So I think these are some of the policy measures that practically can be taken to ensure that going forward, growth is also inclusive and there's equity and fairness. I think these are important issues that we should keep in mind. Having said that, now delighted to turn to my colleague, Professor Piroska Nagy to give us her own take on the governor's address and also especially perhaps Piroska to bring out this international dimension out much more clearly, because as I said in passing, the international response to these emerging economies, developing economies really has been far short of what one would have expected. But over to you, Piroska.
Thank you so very much. And thank you, David, for inviting me for this phenomenal panel. It's such a big honor to share the virtual platform for me, at least from here, with Dr. Addison, whom I always admired. I can say, back at the good old times when we were together, myself from the IMF, and also Dr. Lusigi, whose comments were hugely insightful. I learned a lot. My objective here is just to complement these both sort of excellent interventions and put, as David just asked me, to put the whole thing in the whole issues more in an international perspective, maybe more in the context of what's happening in emerging markets in general, what has been happening and what are the new challenges, and in central banking in general. Before doing so, I cannot not do some appreciation, because one has to say that Ghana has been a pioneer in so many respects. Like we heard that it was the first central bank that was established in Africa, that was in Ghana. But I recall also, as Governor Addison very humbly said, but Ghana was among the very first, if not the first, to introduce the whole thinking and framework of inflation targeting, focusing on inflation stabilization back in the early 2000s. So we're talking about 20 years ago. And yes, there have been issues, the fiscal dominance, and I see it's recurring, just as at those older times. But the thinking, the framework, the high quality of staff was always there, and taking risks in introducing new frameworks. I would also say that there has been obviously a major fiscal easing. I agree with Angela that those were exceptional times in the COVID, so we can call it fiscal dominance, but it is called quantitative easing in other parts of the world. And actually, this is something that I think actually could be seen as positive. And then, of course, we all know about the e-SEDI. This is very famous, I have to say. It's a nice competition with Nigeria, but the Digital Ghana agenda is actually well known beyond the borders of not only Ghana but West Africa. So there's a lot of innovation, a lot of risk taking, a lot of fresh thinking, and And I salute you, Governor, and the Bank of Ghana for that. Now, I will make 4 points. One, of why we can be humble about the current challenges of today, but as David was alluding to, we have to take stock of the major achievements that emerging markets have done in central banking. And that will be my first point, explaining a little bit. Then, facing the obvious in the room, not even an elephant, facing it head on, inflation is back with a vengeance. What to do about it in the emerging market context, and how much similarities and differences there vis-a-vis advanced countries is an issue, I think, and it's worth exploring a little bit. Then what central banks can do about it in emerging markets particularly, and then maybe some humble lessons indeed about what to do next in terms of the profession. This is not about Ghana, it's not about emerging, the profession central banking to reestablish some credibility, because some credibility has been lost, let's be honest. Okay, first the achievements. Central banking in emerging markets has seen a quiet revolution in the last decade. This is Ghana, this is Africa, but in general. We have seen inflation coming down. I mean, obviously there are episodes and there are, some outliers, but we have seen inflation coming down everywhere. Financial stability, as the governor rightly said, is a precondition for any sustainable growth, microfinance, distributive equality. So that has happened. Prior to the crisis, there's been a massive improvement, and that's because of the good framework, because of the credibility, because of the risk-taking of governors and staff as in the Bank of Ghana. Now, built on that credibility, actually what we saw during the COVID crisis in a broader context is that emerging markets were able to mount an anti-cyclical monetary response and policy response overall, which was unprecedented. In the past, when there was an external shock, I mean, obviously the COVID was, the external, the global for everybody simultaneously. But in all the times, emerging markets couldn't react proactively, couldn't increase fiscal deficit if social needs required. This time around, it was possible without risks to the exchange rate, without major spillovers through inflation, at least in the first, the real crisis response case in 2020. And I also read positively that Ghana was one of the few, as Angela said, countries who didn't suffer a recession in 2020 at a price, because debt went up, public debt went up, but it was incredibly important to avoid that, being dragged down for years in recession. So that was a huge first for emerging markets, and that was done just as in advanced countries. So very similar, smaller scale, obviously, because the fiscal and monetary space is just more limited in these countries than in advanced countries. But we saw a very similar policy mix in advanced countries mounting this anti-cyclical crisis response. I think it was tremendous and a source of pride. But the problem is that inflation is back, and is back because exit from these extraordinary policies was very difficult. The culprits mainly have been advanced countries, the Fed and the ECB. These are the systemic central banks of our era. Just made mistakes and not delaying, taking temporarily too long, and maybe waiting for the second round effects. But the fact is that the first round effects last for a long time. They become general and need perhaps a faster policy response. So inflation is back. And we see that in advanced countries, the population is shocked. They don't know how to react. I have to say that emerging markets actually have reacted much faster. Even the governor said that they started to raise interest rates, half a year before the Fed woke up. And the ECB hasn't done yet a turnaround, and there are other geopolitical reasons, but still inflation is still close to double digit in advanced countries. So in a sense, we see Brazil, we saw a host of other emerging markets. We saw emerging markets in Europe to start with monetary tightening basically a year before advanced countries woke up. Now, there is another difference in inflation, and then that is the following, that in advanced countries, because they mounted a much bigger policy package, the crisis package, were able to during COVID, they, in some cases, particularly in the US, this fiscal stimulus went on way too long. And there is excess demand relative to available supply. So it's a very much demand-driven phenomenon. Of course, supply constraints and the ruptures are there. Commodity price increases are hitting these countries. But there is a distinct role of excessive demand that perhaps we don't see that much in emerging markets. I don't want to exaggerate. Obviously, we just heard the governor that there is a fiscal issue and high deficit even this year. So it's not that easy to rein in on the fiscal accounts in one go. But it seems that that in some countries, India and others, the former governor Raghu Rajan, who's professor now in Chicago, former IMF chief economist, makes his point very strongly that supply side constraints seem to be stronger in emerging market economies than in advanced countries. Moreover, emerging market economies now suffer from the negative spillovers from advanced country monetary tightening, because in the end, the Fed has started to increase, and this is going faster than it originally forward guidance communicated. And it will address its big balance sheet as well. So there is a multifaceted reaction to the very high inflation that we see in the US and elsewhere in advanced countries. But this time around, the negative spillovers are coming through. External demand will be much lower for emerging markets, including countries in Africa, much higher borrowing costs, no question, capital outflows that needs to wade in, and then there comes a problem when it comes to investment. And of course, countries with high debt, and Ghana is among them, or high share of foreign exchange in money debt, can find themselves in a hot situation very quickly when this happens. Now, what emerging markets can do in this context? High inflation. Obviously, this is the primary mandate as the governor of the central bank to address this problem. So it's a very, very, I don't envy you, Mr. Governor. It's a very delicate balancing act to try to tighten enough to avoid too much capital outflow, limit capital outflow, and make available capital for the economy. Not to dampen too much demand, but at the same time, credibly, taming on inflation, which if it runs to close to 28 from last year 7, it's really an issue and has to be dealt with perhaps aggressively. Unfortunately, there is no measure. There will be costs. But I think, as the governor said, that the importance is to focus on gradually reducing inflation. But I would say something additional, that just as in the success phase during the COVID crisis response, when monetary policy was working hand in hand in fiscal policy and was also coordinated with the right regulatory easing and forbearance. So we had to think about the policy mix, right? We have to think about, when taming on inflation, about the policy mix again. So yes, the central bank is apparently mandated to deal with inflation, but it cannot do it alone. or if it is forced to be doing along, the output cost will be tremendous. So there has to be reining on fiscal cost and fiscal deficit and reducing the fiscal dominance. So fiscal policy must play a role, some fiscal coordination, and this is my other point, some supply side reforms are possible to ease the supply constraint, which I think is more dominant in emerging markets these days. Now, when we talk about supply side reform, we say, oh, this is a long-term thing and it takes years to come and blah, blah, blah. Some of it are low-hanging fruits. I think maybe in the case of Ghana, because they advanced so much, there are not that many low-hanging fruits, but I wonder, sort of in terms of establishing new business, reducing red tape, easing labor markets, there is still perhaps things to do, dealing with state enterprises and all that. So there could be some low-hanging fruits that can ease the supply constraint at home. A little warning, I am not saying this is an issue for Ghana, but in general, emerging markets and in general in today's populist world in many countries, it is incredibly important to avoid the temptation of protectionism, because there is a tendency to think that I erase the trade barriers, I create a wall, and there could be justifiable reasons to do that in certain extreme cases, but overall it will create just rent seeking, it will create corruption and limit competition. And on the long term, it doesn't bring growth. So avoiding, for emerging markets, particularly avoiding the temptation of protection, I think is quite important. Now, finally, I think central banks have to do what Governor Addison just did in front of us very humbly, to do a little soul searching. Strangely enough, this is maybe easier for those who face the uphill battle of every day of balancing the policy, of having the right measures, of explaining it painfully sometimes to the population what has to be done, what can be done, but cannot be done. And this kind of communication, direct communication, may be easier in emerging markets because we don't see it in the Fed. I'm sitting in the US and you see that the Federal Reserve, which obviously the most important central bank in the world, and actually I didn't mention, but provided repo facilities, FX facilities to many countries during the COVID crisis, which was brilliant and very helpful. So they haven't done this soul searching. What led to the mistakes? And it's very difficult to fix stuff when you don't understand what the real problem is. So and some emerging markets also, I think, have to think about it. And again, maybe finish with this, that the Bank of Ghana has always excelled, as I started my little intervention here saying, innovate. So take the example of the Bank of Ghana. Even in the most difficult times, they are not saying what I have heard from some central banks, that we're not going to introduce now. We kind of put the central bank digital currency to the back burner. I think it's a huge mistake, because you don't put off innovation just because you have some problems. Exactly, this is the time when you have to innovate. And thinking about Ghana, first you think about a nation of entrepreneurs, of innovators. Even during COVID, there was so much new innovation, digitalization. So that's what has to be taken over. And I salute the governor for pushing with the central bank digital currency project, because that's the future. That's the future in so many respects. And I'm very pleased to see that's in this area, again, the Bank of Ghana is taking the lead. Thank you very much. I stop here and happy to answer any questions.
Thank you very much, Piroska. I think you put the issues in a much broader context, in an international context, and I think you rightly started off, excuse me, you rightly started off by underscoring the achievements of central banking in emerging economies, developing economies during the course of this century, and I think I'd also like to underscore that. And part of that, I think Piroska also touched on this, has been the quality of the analytical work that is being done. I know your head of research is here. Many of us have had to go to your website to look at what's going on. And I have to say that very good work is being done and on that front. Also, I think an important point that is sometimes missed that Piroska brought out is that emerging economies, the central banks started to react to these inflationary pressures much more quickly than, as we have seen, the major central banks. That I think also speaks to this credibility issue that Piroska you raised, because they know, I mean, you know, that if you don't, react, the markets will punish you, which is in fact already happening. I also quite liked Piroska, as you talked about, yes, inflation is back. There's need to have a right policy mix to deal with this. But I quite like the point you made about the supply side aspect, that this is not just a medium term or long term issue. The number of things that could be done now, and I think Angela also touched on this and actually gave us examples of measures that could be taken. And here, of course, good news, at least this week, is that there is some sense that you cannot rely on protectionism either internationally or nationally. I think the deal at the WTO that was announced this week, in some ways is tepid, but it sends the right signal, around the world that this is a time to open up trade. It's not the time to close trade. And the same could be said for Africa's own trade initiative, the African Continental Free Trade Area, which should be part of this response, that would like to see it get off the ground very quickly, because this too is could be part of the innovation that we're Piroska ended with, the innovative responses that are needed. So I think, ladies and gentlemen, the audience and also those who are online, I think you've heard three very fascinating accounts of the evolution of central banking, also the current crisis, and the measures and efforts that are being taken to respond to it. So I would now like to open the floor for your own questions and comments to the governor, of course, but also to our two distinguished panelists as well. Perhaps I could begin by taking questions in the room, and I can see that the mic is ready to go around. Yes, I see two hands up on this side of the room. And I do believe my colleague Fadil is monitoring what's, we've got 5 questions online, and do please let me have, or do please read them at the appropriate time. So over here first, yes, please, you have the floor.
Hi there, my name is Rachel Savage. I'm a journalist with Reuters. Governor Addison, thank you so much for your talk. That was really, really fascinating. When do you think inflation will peak in Ghana? And do you think interest rates need to rise further to bring inflation under control? Or does fiscal policy does there need to be more action by the government in terms of fiscal policy? Thank you.
I think we'll take the next question, which is also on this side of the room, and then we'll come to the back of the room over there. Yes, please go ahead.
Yeah, hello, I'm Jan Hendricks, and I'm a graduate student and researcher at the University of Oxford. And I also wanted to say thank you so much, Dr. Addison, for your fascinating talk. And I have 2 questions to you. One was, you talked about the issue of external financing and the downgrade of Ghana that happened earlier this year. And also there were then subsequently some issues with the US dollar denominated Ghanaian bonds. And I was wondering what the next steps were that the central bank had in mind in order to deal with this issue of external financing, also in relation to the US dollar denominated Ghanaian bonds. And the second question is related to what Dr. Lusigi said. I was wondering where you see or how you see the role of the Bank of Ghana in order to provide the necessary fiscal space and also the challenges attached to that when it comes to economic recovery. Thank you very much.
We'll take one more question and then our panelists will respond. Yes, please, go ahead.
My name is Kwaku Frimpong. I'm a doctoral researcher at the University of the Southern. I want to applaud the Bank of Ghana governor and his colleagues for what they are doing in the midst of the challenges we face as a country. For some decades now, our economy has been described as having two parts, formal and informal, where the formal is productive and the informal is unproductive. But when it comes to the global north, the informal economy exists, but they don't describe it as that. They call it non-standard form of employment. So do you agree with me that we should move away of describing our economy as having two parts, but only one giant ball, where we have a policy mix and we see it as having a labor market with different aspects so that our policy mix will help those in non-standard form of employment, which form majority of our labor force? Thank you.
Yeah, thank you very much. I suggest that the speakers respond in the order in which you spoke. So Dr. Addison, please go first, Angela, and then Piroska.
Actually, I'm tempted to, is this working? I'm tempted to respond to the last question first, this issue of duality and economy being formal and informal. This was a concept that we used to have in the development literature in the 70s. I think that the world has moved away from the notion of duality a long time ago. I'll give you as an example the financial sector in Ghana, where currently the objective is to try to have as many people included as possible, improve the access to finance issue. And you would see that a lot of so-called informal institutions have been formalized, such as the microfinance institutions, where every corner that you turn, you can find a small microfinance institution that is taking deposits and granting credit. So you don't find that level of dualization, financial dualization that you used to have in the early 70s. What we tend to have right now are different tiers in the financial sector. You can look at the commercial universal banks. Now we have a development bank as well. And then below that, you have the savings and loan institutions. And even further down, you have the micro institutions catering for almost the entire spectrum of the economy.
Could I press you on trade? Would you say the same for trade? I think for
well,
the
this is why I restricted myself to the financial sector. Because I really do not want to get into
because I think it plays out in a different way. I think we all know the trade. Okay, very good.
And then the question on the external financing issue. I think you wanted to find out what is happening to the dollar-denominated bonds. The reason for which we had to take some of the difficult monetary policy decisions that we have taken. You look at the Ghanaian economic situation, you're looking at very high levels of inflation in the context of very high levels of government debt, in the context of all these shocks impacting on the economy, which would have an impact on growth. Yet we tightened monetary policy on 2 occasions, right? And one of the reasons for doing that was to ensure that we kept, non-resident flows at home to support the domestic economy. So yes, I mean, the external financing constraint is a major factor, in our circumstances. And we are doing the best that we can to try to manage or, keep the incentives right, keeping those investor flows in the local economy. And that brings me to the question from Reuters. She's more or less asking me whether we are going to be seeing more policy tightening or we think inflation has peaked. And we have been arguing that the pace at which prices have gone up, the last reading that we saw, appears to be slowing down. Now, whether that means inflation has peaked or not is a different question. But we are hoping that given the policy coordination between us and the fiscal authorities, as you're aware, we have seen a 30% cut in fiscal expenditures for 2022. And as Piroska said, this cannot be done by the monetary policy alone. You also need that fiscal complement to address this inflation situation that we are facing. So this is where we are. We think that the pace at which prices are going to grow probably will slow down, but we are not sure whether we have peaked.
Okay, so I think I'll address the question around informality. And to be honest, I don't think the solution to informality is formalization, right? What are the characteristics of the informal sector in many African countries? It's vulnerable employment, low return on investment, no social protection. So those are the kind of things that you want to address by saying, how do we provide the incentives so that people move away from survival-based enterprises to more opportunity-driven enterprises that can grow? So, you know, I don't think you can just paint it as let's keep informality or let's not keep informality, but to really look at the root issues around why we have the informal sector. And we really want to see these enterprises growing, at least the viable enterprises, because that's where we have innovation and that's where we have job creation. So I don't equate that to the gig economy in other countries, because here there's social protection, right? But there, if you don't survive, you don't survive. And we know what happened with COVID, when there was a lockdown. I mean, there was literally nothing for a while. And I think the case of Ghana is very instructive, because the lockdown didn't last very long. It lasted until there were solutions and a way to go forward so that people could still be able to make a living. So I think that's my short response, but we can have a discussion after.
Piroska, would you like to also comment?
These are such excellent answers. I would just maybe underline what the governor has said, that the priority now seems to be at this level of continued external shocks, at this level of rising borrowing costs, is to focus on redressing the fiscal space. So there is not too much in terms, because there was a question whether there is any fiscal space for other things. The priorities needs to be set right, and I think what the governor said is the right priority to address the price situation with support from fiscal, which means that the deficit needs to reduce. Now, at the same time, what we haven't mentioned is what role for the IFIs, and of course Ghana is a very, very respected member of the international community. But we've seen the news about around the IMF discussions, so that's a choice. But it's good to know that there is this safety net available if needed from the IMF and other institutions of Ghana's choice. I would just mention en passant that the most important global financial safety net, the single most important, but most powerful, are the currency swaps by major systemic central banks, the Federal Reserve and the ECB. They were there and available at the time of the COVID crisis. I think they were brilliant. They are not discussed too much because they might be perceived as with some conflict of the national mandate of the ECB or the exact mandate of the national mandate of the Fed or the exact mandate of the ECB. But the fact of the matter that when they were available, that provided a powerful safety net. And I think that in a world where the Fed needs to tighten significantly to regain its lost credibility, a somewhat lost credibility, keeping these swap operations for market pressure reasons in place is an important thing. I think it would be good to to have this on the agenda a little bit more.
Any other questions in the room? And we can, yes, the lady here in front and also another lady at the back. Maybe the lady at the back first. Yeah, please go ahead.
Hello. Yeah. Hi. Yeah. So thank you for your talk today. It's been very insightful. My name is Adele. I'm an alumni, and I currently work in technology. So I have two questions. So my first question is just about looking to the future. We've been talking about some of the shocks that we're currently experiencing. I remember a couple of years ago, there was like a big survey done by the Future of Ghana that highlighted that in the future, there'll be like a reduction in remittances going back into Ghana, you know, from people that have left, you know, like families sending money back. So in the future, what policies are going to be introduced to sort of deal with this? Are there going to be legitimate forms for people to invest in Ghana? And then secondly, there was talk about digitization. So I was just curious to know what the current challenges are and yeah, like what stage in the process of digitization that Ghana is currently in. Yeah.
Thank you very much. Very good. And in front, here, yeah.
Thank you very much. Good evening, everyone. My name is Linda Wayo, and I'm a member of the Chartered Banker Institute and also a board member for the UK Ghana Chamber of Commerce. Thank you very much, Governor, for your insightful lecture. My question is similar to the second question from the lady that just spoke. So it's great to know that Ghana is trialing the CBDC. It will be interesting to know what successes or challenges you face so far, and if there are any timelines in terms of when it's going to be launched. Thank you.
Thank you. Yeah. Yes, I think perhaps we could have a second round of responses and then we'll come to the questions. Governor,
I try to stay away from giving any timelines on the CBDC. We have a pilot running, which should be ending in the next few weeks. And I think it will be a little clearer by then when we will probably be launching this digital currency. Sorry. Now, the earlier question on remittances, which have been very important to stability in Ghana over the years. If you looked at the data that we saw in the early 2000s, we were getting much more in remittances than in ODA. At that time, ODA was receiving a lot of attention. So the policy really has tried to facilitate, remittance flows into Ghana. Right now, the issue of digitization is also helping. A lot of the fintechs in Ghana are participating in this remittance industry, all with a view to sort of reduce the costs associated with transfers. And the competition by the fintechs has really brought the transfer charges on remittances down. At the more macro level, we tried to introduce diasporan bonds. Again, this was in 2007. Unfortunately, that really didn't take off too well, but I think it's also one of the things that one can go back to and see whether they can be redesigned to interest the Ghanaian diaspora out there. And then the issue of foreign currency accounts in Ghana, which do not pay interest rates that are attractive enough for non-residents to keep their foreign savings in Ghana. This is one of the issues that somebody accosted me on. And we are looking at ways in which we can make these foreign currency accounts, more attractive for non-resident Ghanaians.
Angela?
Yep. Thank you. Just a quick one on remittances. I believe there are some studies that have shown that they were actually quite resilient even during the COVID crisis. So actually people expected the flows to go down much further than they did. But the real question is, how do we effectively use that resource for development? Currently, it's mainly for consumption. How do we package investment opportunity areas, for instance, so that people in the diaspora can be able to actually contribute to sustainable development projects? And one of the things that UNDP is doing is looking at SDG investor maps, trying to find out what are the investment opportunity areas across the country. And we've currently done it for 12 areas, and you can possibly find it on the SDG investor platform. But that's it. I mean, we have this flow of financing. How can we turn that into an additional area that will be able to fill some of these SDG investment gaps? Yeah, that's just a quick back.
Yeah, thank you for that. Piroska, any comments on what's been?
Very quickly, this is Angela is so right in saying that this has been such a challenge. Remittances in general, as the governor said, has been more important than official financing for years, and more resilient, as we know. Yet it has been difficult to harness it into a kind of a bankable product, so to speak. So consumption support is good. It's good, particularly when we have big shocks and stuff, but making it available for investment. So securitization is one form, and I just want to say that in some countries it has worked, in others it hasn't. So there might be, we can't go into details, but there are some lessons that one can learn from experiences elsewhere in that.
Very good, thank you. Fabio? Microphone in front.
Thanks. So the first question is from Ubo Okonkwo, who's the Regional Liaison Officer for the African Alumni Associations. And his question is aimed at Dr. Addison, and it is, what has been the fate of the ECO, the West African Common Currency, and when will it be launched?
Could you please repeat that again?
Yeah, so what has been the fate of the ECO, the West African Common Currency, and when will it be launched? Then we have a question from Angus Chapman, an LSE alumni and researcher at IC Publications, which is, given the state of international debt markets and Ghana's external debt profile, why isn't Ghana considering a new IMF facility, and is there a fallback plan? Should I just do one more? Then another question from Kingsley Bikoe from UNDP Ghana to Dr. Addison, which is, to improve resilience and adaptation of the impacts of climate change, green development pathways is advocated for by many and is understood by the Bank of Ghana is understood that the Bank of Ghana has green financing, especially green bonds, high on the agenda. Is it still the case, and how is government working towards this, and how will this transform the development trajectory of the country?
And is there one more?
There's quite a few more, but we just
okay, we can take this three. Let's have another round. Governor Addison.
I bet the UNDP gentleman should see me at home when I'm there, and we can have a discussion on green finance. But the question on why won't Ghana take an IMF facility, I think, was one of the questions that I heard. And I think that it's a good question for us. This is a period of soul searching, similar to the earlier discussion that we had on the mandates of central banks and what role should central banks be playing in developing countries. Ghana has been to the IMF for 17 occasions, and we are still in this situation, right? And I think that the Ghanaian people want to do a little bit of soul searching and to see whether there are other options other than rushing to the fund anytime that the country is in crisis. And I think we should allow that process to take place. At the appropriate time, they would know what the right solution is. 17 times we always come back into crisis. So what is it that we are doing wrongly? And do we really need the IMF to do that properly? I think this is the debate going on at home. The ECO is still an idea in progress. As you know, this is something that the central banks in the West African region has been working on, including David Luke's country, Sierra Leone. Been working on this since the 1990s. And I think it's a good thing that the technical people that are involved in this project see the importance of having the appropriate conditions underlie the currency. Otherwise, it's very easy to print an eco and circulate it, and then the currency fails because that currency would have no value. But at least we have technical people in West Africa who put a premium on having strong underlying macro conditions before common currency is introduced. And I believe that they were making reasonable progress till COVID came in, and then the whole process was suspended for 2 years or so. More recently, I can see that we are trying to get back to the table again and restart the conversations on that.
Thank you for that. I don't know if Piroska, you'd like to comment on any of this? Or
maybe just complementing on this eco issue. I mean, just look at the Eurozone. It is not an easy undertaking. So you don't want to do it unless you are 100% sure that you can, qualify for a common currency area in so many respects.
And it's being kicked down the road to 2027, I believe. That will be the next time that the whole issue would be reviewed again and so on, but nothing would happen between now and 2027.
I have not even heard about 2027.
Well, I'm watching on your website. Yes. Angela, any thoughts on this?
I think maybe I would, sorry, just add one idea that if you want to think about common, maybe central banks could think about, digital currencies and making them compatible. Central bank digital currency maker. That's the future, not the.
And there are other innovations that are going on. The Afreximbank has set up the scheme for using national currencies in trade in the context of the FCFTA. So that's another alternative that could be used and considered for now. Fadil?
A question from Martin Weissel, which is aimed for Piroska, and is that you've mentioned a policy mix needed to address the long-term issue of supply-side shocks. You said there was some room for Ghana to act on this. Could you elaborate further with the type of policies you had in mind?
I mean, I don't claim to know enough about giving policy prescriptions for the governor. That would be really imprudent. But typically, you would look at on the short term on ease of business and red tape cutting, and including labor market rigidities where they exist. I'm not saying that they are humongous in Ghana, but I would imagine that there is some room. In some emerging markets, this could be a tremendous source of low-hanging fruit to ease supply constraint.
Then have a question from Paddy Knusden, which is aimed at Dr. Addison, which is, what are some of the major lessons linked to the failure of the diaspora bonds in Ghana? And then a final question from George Otu, which is that is it possible to create fiscal policies at the Bank of Ghana that directly incentivize youth to unlock the hidden value that goes unrealized? For example, direct monetary injections into projects that are actively unlocking hidden value in non-traditional spaces, such as global fashion or the second-hand market in Ghana.
The question about central bank financing directly projects, I believe this was the last question that you made. And I should say that if you take the Ghana incentive system for agricultural lending, this is one of the projects that the bank had put in a lot of resources in order to provide some kind of guarantee scheme for lending by the banks to the agricultural sector. And then the issue of why the diasporan bonds did not work. I think the timing of the issuance of those bonds was also part of the problem. I mean, all of this happened at the time that there was a lot of instability, macroeconomic instability, very high inflation and exchange rates instability, and that kind of environment really makes any instrument that is of a longer duration very difficult to market. So we need to make sure that we have the right conditions before we can successfully introduce, a medium-term instrument into the market.
Any other comments? Piroska? No? Okay. Yeah, okay. So we can wrap up. No other questions, comments from the audience here? Yeah. Anything else that you'd like to say before we close?
Well, again, just to say that it's a time for soul searching for everybody. And I like, the presentation made by Piroska, because not many people tie the policy interventions that were implemented during the COVID to the current inflation crisis that we are going through. It was very fashionable at the time for central banks to be injecting liquidity, quantitative easing, government interventions. And it was as if there were no monetary implications in terms of pushing that kind of liquidity into the system and whether that kind of liquidity would impact the price level. Indeed, when the prices started going up, there was a lot of debate on whether what we were saying was permanent or temporary. I believe the Fed initially dismissed it as a temporary development which would correct itself. And that's the reason why they did not immediately react to the inflation issue. But as you put it, we saw the uptake in the price level and reacted immediately. And we're hoping that we will continue to remain alert and also be taking in the caution that this is not a battle which only central banks will win. We need to work in coordination with other agencies, including the fiscal authorities and some of the agencies that are also working on the supply side, the importance of food production, the issue about regional cooperation and regional trading to create opportunities. Opportunities that are being presented by the African Continental Free Trade Area. As you said, this Afri-Exim payments and settlement system. It's really linking the central banks on the continent to be able to, settle interbank transactions among the countries on the continent. And they are piloting it with West Africa. Yes. So it's really the West African central banks that are currently piloting the PAPs. The intention is to eventually move it to away just from the wholesale sort of settlement arrangement into the retail end, where you could even have fintechs and mobile firms, settling on the PAP. So it's a project that we are all fairly confident will help in terms of addressing the supply side issues.
Yeah. Thank you very much for that. Just for anyone who may wonder what the PAPS is, I believe it stands for the Pan-African
African Payments and Settlement System.
System. Yeah, that's what it is. Look it up on the internet. Interesting innovation. Angela?
I'd just like to, first of all, thank you very much for inviting us to be part of this discussion. I'm very excited that Dr. Addison has told us that he's now looking at development-oriented framework. And we'll be following up on that, particularly on the issue around green bonds. But definitely this discussion has highlighted the important role that central banks need to play now in really pushing that enabling environment for investment and expanding that collaboration so that we can have that expanded fiscal space for development. So thank you very much.
Piroska, you have literally almost the last word.
Thank you so much. It's been a real honor. I think I would just close by saying that emerging markets have also come all together a very long way. And in the COVID crisis and post-COVID crisis, we see that actually they have reacted faster and earlier and wiser than advanced country homologues. So we see that the human capacity, the institutional capacity is there in emerging markets. There are obviously weaknesses. Some things are given, the external shocks, the shallowness of the financial markets is not going to change over time. But the single most important thing is that there's a human capital and the institutional framework is there. And that I think should give us strong hopes that the current, indeed exceptionally hot environment for central banks will be well managed, supported by other policies as well.
Yeah, thank you very much, Piroska. Well, it only remains for me to firstly thank you, the audience here in this room, for being so attentive and also for the questions that you have asked the panel. And also to thank those who are online as well for joining us this evening, and also for the questions that were sent through. Let me thank Dr. Addison. I think several people have commented on your talk this evening, that it was insightful and has given many much to think about. And our two panelists, Angela, thank you very much. I think you have spoken for the poor, I would put it that way, as a true and good UNDP person. I think you've brought that very much front and center of your interventions, and reminding us what is really at stake in terms of ordinary people's lives. And then also Piroska, whom I don't see anymore on the screen, but just to thank Piroska for bringing that broader perspective of how emerging economies have fared throughout the 2000s into this crisis, and some of the insights that we could take from that. Please join us again online and in person if you can at the future Africa Talk events of the Firoz Lalji Institute for Africa at the LSE. Do watch out for announcements, and please feel very welcome to join us again. And let me make a small commercial for a book that we're working on that we will be publishing very shortly. And this is how COVID impacted African trade, the Africa Trade Policy Review 2023, which will be coming out, we expect, towards the end of this year. So watch out for it. Some of the issues that have been discussed here tonight covered in some way in that book. And once again, thanks to all, thanks to my colleagues who have put this together, our technicians and everyone. And let me wish you a very good evening. And I do hope that for those who are with us, you do not have too much hassle getting back home. So thank you very much, everyone.